Have you ever heard of a bank that's, only 4 years old but is already posting double-digit returns? A bank that's growing at lightning speed and winning all sorts of awards for its workplace culture? Yeah, probably not. Today, we're going to pull back the curtain on a company called DF Capital. They're a highly profitable specialist bank that's been quietly punching way above its weight.
Okay, so how are we going to unpack this? First, we'll get right to the heart of what this bank actually does. Then we'll look at their incredible growth story, told in the numbers. After that, we're going to search for the secret sauce behind their success, see how they handle their risks, and then finally, we'll take a peek into the future to see what's next for them.
So, first up, what exactly makes DF Capital so different from your typical bank? Well, it all comes down to one core specialty. And that specialty is built entirely around this one pretty fundamental question.
It's this thing called distribution finance, and you know what? It's surprisingly simple. Just think of it like a special credit card that a dealer uses to stock their showroom without tying up all their own cash. So DF Capital pays the manufacturer, the dealer gets the inventory, say a bunch of caravans, and then they pay DF Capital back when they sell one. It's huge because it frees up all this crucial working capital for these businesses to grow.
And you can see just how incredibly focused they are. I mean, sure, they serve commercial sectors like transport and agriculture, but look at this. A massive 65% of their lending is all in leisure. We're talking motorhomes, holiday lodges, boats, that kind of thing. It's a niche within a niche, really, and by becoming the absolute experts here, they've carved out a very profitable space for themselves.
So that's what they do. But the next question is, how well are they doing it? Well, the numbers here tell a pretty incredible story of growth.
By the middle of 2025, their total loan book hit £728 million. And look, that's an impressive number on its own, but it's the speed at which they got there that's the real story.
Just look at this trajectory. Seriously. Back in 2021, the loan book was under £250 million. By mid-2025, it had almost quadrupled. This isn't just steady growth, folks. This is absolutely explosive expansion.
And here's the kicker. They're not just growing for the sake of it. They're incredibly profitable. In 2024, they posted over £19 million in profit before tax. For a company that only got its banking license back in 2020, that is truly an exceptional achievement.
And wow, what a turnaround it's been. They've gone from being in the red in 2021 to a really significant profit just 3 years later. So the big question is, how on earth are they doing it? And that brings us right to our third section. To really understand their success, we have to look beyond the financials, beyond the balance sheet, and into the culture they've so carefully built.
The company's own leadership believes their success isn't just about spreadsheets and algorithms. As their chair, Mark Stevens, puts it, it's about the careful orchestration of strategy, culture, people, and leadership. They truly see their culture as a core competitive advantage.
And hey, this isn't just them talking themselves up. The external validation is all right here. They're consistently recognized as a world-class, top-tier company to work for, and they've even won awards for their social conscience. This tells you they've built an environment where their people are genuinely engaged and motivated to do great work.
Their own internal data really backs this up. Look, they're hitting their targets for keeping their talented people and for having a diverse board. And what I like here is they're also transparent about where they need to get better, like with the gender pay gap, which they flagged as a key priority. This focus on people is clearly a huge part of their strategy.
Of course, banking is a risky business, right? That's just the nature of the beast. So let's take a look at how a fast-growing bank like DF Capital manages those risks to make sure all this success is actually sustainable.
They use this classic, really robust model called the 3 lines of defense. The key here, and why it works so well, is that it creates crystal clear accountability. The first line, that's the business itself. They own the risk. The second line, risk and compliance, is there to challenge them. And that third line, internal audit, acts as an independent check to make sure the whole system is working. It's a really clear, structured approach.
And they apply this same kind of thinking to really complex big-picture risks too. Take climate change, for example. They're not just thinking about physical risks like a flood hitting a dealership. They're also planning for what they call transition risks. Things like, how could a global shift to a net zero economy impact the value of the motorhomes and tractors they finance? It's really forward-looking stuff.
This table gives us a really clear-eyed view of what they consider their top concerns. Macroeconomic conditions are rated as a high risk, which, let's be honest, makes sense for any lender right now. They also keep a close eye on this key operational risk called sold out of trust. That's where a dealer sells something but doesn't repay the loan. And of course, cyber risk. They are clearly very aware of the threats they face.
All right, so for a bank that has come so far, so fast, what's next? Well, their big plan involves moving beyond the dealership forecourt.
Their whole strategy is to go beyond the forecourt. So they've absolutely mastered financing the dealer's inventory. The next logical step, they want to finance the end customer's purchase from that dealer. And they're going to do that with a new product called asset finance.
And it's just such a natural next step for them. Think about it. They already have these strong relationships with nearly 1,500 dealers. So by offering things like hire purchase and leasing to the people who are actually buying the caravans or the tractors or the motorcycles from those dealers, they can make those relationships even stronger and open up huge new revenue streams. They got the green light from regulators earlier this year and are already getting dealers on board.
And this really brings us to the central question for DF Capital's future. They have this proven, highly profitable core business, and now they've just switched on a powerful new engine for growth. The real test, the big challenge, will be whether they can scale up without watering down that special people-first culture that got them here in the first place. And that's a question only time will answer.